Welcome to TradeExist.com. We are thrilled to introduce you to a trading strategy that is nothing short of extraordinary. We understand that when it comes to investing, you're looking for something more than just average returns. We want to shine, to stand out in the vast universe of financial markets. This is where our strategy comes into play. CLAU is a strong example of profitable trading methodologies that has delivered extraordinary results. CLAU is the art of selecting gems. Our strategy meticulously assesses metrics such as net margin, return on equity, ROE, return on investment, ROI, earnings per share, EPS. These parameters are building blocks of our selections. They provide a strong foundation for growth and stability. Our strategy isn't a one-time wonder. It's designed for consistent excellence. We don't share fleeting trends. Instead, we focus on enduring value and steady growth. The CLAU trading strategy caters to growth-oriented investors who seek to capitalize on exponential growth potential with a moderate risk framework. At the heart of a CLAU trading strategy lies a meticulously crafted asset allocation approach. CLAU's portfolio is a focused portfolio. CLAU's portfolio is thoroughly composed of just 3 carefully chosen stocks. Our stock selection is a growth-centric one. However, it's not merely about selecting companies with the highest numbers. Rather, we look for companies that exhibit growth potential within a specific, sustainable threshold. CLAU combines balance potential with sustainability. We believe in combining the financial health and stability of our chosen companies with their capacity for exponential growth. At CLAU, we don't chase after fleeting trends or speculative investments. Instead, we focus on building a portfolio that stands the test of time and empowers our investors to participate in the exciting journey of companies with promising growth prospects. Our approach to asset allocation is a testament to our commitment to achieving both financial performance and sustainability. CLAU's approach to investment embraces risk for remarkable returns. Our strategy is not about avoiding risk, it's about managing it intelligently. It's about balancing the thrill of high returns with the reality of market fluctuations. And when you look at CLAU's performance, you see that this approach pays off. In the end, it's your courage and discipline that will be richly rewarded. CLAU distinguishes itself with 6 meticulously crafted parameters. Our first criterion is analyst ratings. We focus on companies with an average analyst rating of 2 or lower, indicating strong buying potential. CLAU's second criterion is net margin. Net margin is a crucial indicator of a company's financial health and efficiency. Selecting stocks with high net margins is a core part of our strategy, aimed at investing financially sound, efficient, and potentially less risky companies. Net margin is most effective when used in conjunction with other financial metrics and a comprehensive analysis of the company's overall business model, industry position, and growth prospects. This manufactured approach is the key for the success of our strategy. Our third criterion is ROE. Return on equity, ROE, is a financial ratio that measures a company's ability to generate profits from its shareholders' equity. It's self-evident that investing in companies with a higher return on equity, ROE, is always a good idea, as you are putting your money on a company with a good financial performance and an efficient management. CLAU's fourth criterion is ROI. The return on investment ROI of a company is a financial metric used to evaluate the efficiency of a company's investment or to compare the efficiency of a number of different investments within the company. It is essentially a measure of the profitability and performance of the company calculated as a percentage. Focusing on stocks of companies with a higher ROI stands as a sound strategic approach, offering the potential for robust returns and signaling a wise allocation of capital in the pursuit of long-term investment success. The fifth criterion is EPS surprise. EPS, or earnings per share, is a financial metric that measures a company's profitability distributed on each outstanding share of a common stock. In our CLAU trading strategy, we specifically target companies whose most recent earnings reports have positively surprised analysts with higher than expected EPS, earning per share figures. For us, such a positive earnings surprise serves as a bullish signal. This is based on the premise that when a company's actual earnings outperform the estimates set by financial analysts, it not only reflects the company's robust financial health, but also often leads to a favorable reaction in the market. Lastly, CLAU's sixth criterion is EPS growth forecast. EPS growth forecast, or earnings per share growth forecast, is a projection of how a company's earnings per share is expected to change over a specific period, typically in the future. It's a crucial factor in the valuation of a company for several reasons. Our CLAU trading strategy prioritizes the selection of companies with a forecasted EPS growth that meets a specific threshold. This approach ensures that we focus on businesses not only demonstrating current profitability, but also exhibiting potential for sustainable financial growth. Okay, now it's time to discuss the returns of the strategy, as the number from CLAU speak for themselves. In the past 10 years, CLAU has delivered an annual return of a staggering 43.7%. To put this into perspective, the annual average return of the S&P 500, the benchmark of benchmarks, was 11.03%. The average return over last 10 years demonstrates CLAU's consistent outperformance. It is a testament to its unwavering dedication to delivering results. Now here's the real kicker. The total compounded return of CLAU since its inception in 2014 is a jaw-dropping 3,170.48%. Imagine this. If you had invested $10,000 on January 1st, 2014, you would be sitting on $317,048 today. That's the potential of CLAU. But what truly sets CLAU apart is its remarkable track record against the S&P 500. Over the last decade, CLAU beat the S&P 500 a perfect 10 out of 10 times. Not a single year slipped by where CLAU didn't outshine the benchmark. While the S&P 500 faced its fair share of turbulent years, CLAU stood strong. Consistency has been the hallmark of CLAU's performance. Aside from 2022, CLAU closed every single year in the last decade with gains of 20% or higher. Not just that, it achieved returns exceeding 35%, a remarkable 7 times out of 10. Twice in this remarkable journey, CLAU's performance soared to greater heights, with returns surpassing 85%. While the S&P 500 faced its fair share of turbulent years, CLAU stood strong. In 2022, a year often considered one of the toughest for financial markets in recent memory, CLAU displayed incredible resilience. While the S&P 500 tumbled by a significant 19.44%, CLAU closed the year only slightly negative, a mere 0.6%. And let's talk about drawdowns. While the S&P 500 experienced a maximum drawdown of 23.9%, CLAU's drawdown was noticeably lower at 18.1%. This year was a testament to the consistency and strength of CLAU. We must also mention the challenging year of 2020, marked by the onset of the COVID-19 pandemic. During this period, CLAU experienced its maximum drawdown of 41.5%. But here's the astonishing part. Despite this turbulence, the year 2020 concluded with an extraordinary performance of 45.4%, nearly tripling the return of the S&P 500. In conclusion, CLAU's journey over the last decade is a story of excellence, resilience, and exceptional returns. It's an invitation to join us on this incredible path to financial success, where every year is a winning year and every challenge is an opportunity. The numbers speak for themselves, and the door to this remarkable journey is wide open for those ready to embark on it. Thank you for considering CLAU, where excellence is not an option, it's the norm.